Welcome back. You're watching NDTV Profit. The markets are higher by about 0.5%, but we're keeping an eye on earnings. And let's pull up the stock of CONCOR for you. That one is down 2%. It came out with its second quarter earnings, which have been a little disappointing, lower than what the street was anticipating. We've seen income down 8% at 1,378 crore rupees, and profit after tax was down about 32% from the same period a year ago. We've got Mr. V. Kalyan Rama, CMD of Container Corporation of India, CONCOR, joining us on the phone line. Mr. Rama, thank you so much for speaking with us at NDTV Profit. Now, the revenue has degrown from the same period a year ago. Can you tell us what were the volume growth you saw? What led to this degrowth?
You see, when volume wise we got growth, in Exim we had a growth of 4.6% in this quarter, and in domestic segment we got a growth of 0.5%, and overall we had a growth of 4%. And if you look at the half-yearly comparison with the last half year, we had a growth of around 3% in our handling volumes. But the top line is reduced because particularly one factor which affected is the port congestion surcharge, which was there earlier, has been withdrawn, and we passed on this to our customers. So that has affected our top line. And also some leads have come down, basically because of shifting of the traffic, export-import traffic from JNPT into Mundra, which is bound for the northern India. So these are the major factors which actually reduced our top line. And in profit, because of the competition, and there are some one-off payments we have to do, particularly one of land license fee to the railways. There is an increase in this, and this will increase from April of this year. But the payment, increased payment was done in this quarter.
Right. There was a worry about empty trains because of exports not picking up a lot. Has that continued, and what's happening with double stacking? Is there any improvement there?
Yeah, I'll share with you. See, the empty running is still continuing. This empty running has not come down. In fact, in domestic we could control it. The empty running has come down substantially, and this quarter, if I look at, it is very good. We could reduce the empty running. But in Exim, it is little cause of worry for us because there is further the empty running is going on. So from our side, we started some new initiatives. This is the double stacking which you mentioned out of Katwa. I look at the 6 monthly figures. Compared to last year, there is a 50% increase on the double stack handled at Katwa. And one very interesting initiative we started is doing double stack in exports. Earlier we were only getting imports from ports into Katwas on double stack. But now we started doing export double stack, basically taking exports from our two major terminals in Delhi, TKD, Tughlakabad and Dadri. From there we are taking single stack trains into Katwas and making it a double stack. There we are getting our margins improved, and we are passing on the benefit to the customers, so more volumes are coming to us. It will improve our volumes, and these trains we are running with assured delivery to customers. So they are also happy. This initiative was very much welcomed by the market, and now we are extending this benefit, this sort of initiative to other two terminals, one in Ludhiana and other in Moradabad. So there will be more double stack trains running out of Katwas. So this will increase our numbers. So double stack will also automatically improve our margins. So I hope the entire effect of these initiatives I'm expecting to come to some extent in Q3 results, and Q4 will be fully covered with these initiatives.
All right. I'll come to the impact, sir. Wanted to understand what were the realizations that you saw in this quarter. Was there any improvement?
Realizations are at the same level, not much improvement because of the continuous competition from the road. You see, the diesel prices are still at a very low subdued levels, and the competition is mainly from the road. It's really a tough competition we are facing, and the only thing which I can share with you is the silver lining is that our market share we maintain. It has not gone much, and as you can see, the numbers, physical numbers have improved. So that's a good sign. Now these double stacking and these things, we are running timetable trains. We are trying to improve our margins. Let's see.
So then, can you tell us if realizations were lower than the same period a year ago, and what has been the impact on your margins in second quarter?
No. See, second realizations, as I told you, it's almost on the same level. The margins we maintained, and operating margins, when I look at our railway margin, other margins we maintained. There is no drop in that. See, there are some one-off expenses which have come on this quarter. So actually that affected our PBT.
All right. Sir, what about your capex for the year? Are you on course to complete that? And what is the forecast for revenue growth for the entire year?
See, the capex, we projected a capex of 1150 crores for this FY, and we are on the track. By now, we almost completed 40% in the first 6 months. So I hope we will be able to achieve our capex plans without any problem. Because now in this first 6 months, we started 3 of our own terminals, and we added 2 more to our network with an exclusive arrangement. So as on date, we are present at 66 places in India, and 2 more we added on exclusivity. That makes us 68 locations other than ports. And in the next month, we are going to start 10 new locations. So our presence will be 78 locations by the end of this financial year.
All right.
And capex we will be able to achieve, absolutely no problem. And regarding the growth, I already shared with you, we are expecting, with these initiatives, we are still expecting a 68% growth in our volumes. That should definitely give us better numbers.
All right. Thank you so much, sir, for speaking with us at NDTV Profit. So CONCOR is looking to increase their locations to 78 and 6 to 8% growth expected for the entire financial year. Let's pull up the chart of Tata Global for you. That stock is looking very strong. It's up 4.5%.